we've seen in gold over the last, I guess, 6 weeks has been quite phenomenal. We've gone through a phase of 6 weeks where almost every central banker has decided to print more money. They all have their different reasons for doing so, but it's the first time where I've seen all the major central banks hit the button at the same time. And so we had a very quick response from gold from kind of 1550s to 1750 today. The question is, where is it going from here? And in my mind, I've never seen a QE program where the gold price only moved $35, and that's the end of the run. So I think from this point on, we're going to have ebbs and flows, but on the whole, I would expect gold to start to make new highs. I don't know if we'll see $2,000 this month. Okay, maybe not this month, next month, but I'm confident we'll see it within the next 5 or 6 months. Okay, on the back of all the money printing, and I do not see that stopping at all for at least another 6 to 12, partly because the US economy is slowing. So the reason for such an aggressive stance by the Fed is essentially to get a weaker currency, to get the economy turning around. And also Bernanke hopes that it will also help him in the unemployment issue. Now, I personally don't think QE will have much of an impact on unemployment, which means that he's going to keep printing for a long time. So that's my view. So that's what I think will happen to gold over the next 6 to 12 months easily. For the gold mining sector, this is a conundrum. A lot of people have asked me, why is it that the gold producers or the gold mining industry has done so badly? And there are a few big reasons. Some of them are not the industry's fault, but it's just a function of mining. For example, over the last 12 months, we've seen a lot of political coups and uncertainties in Africa. So there was a derating for a lot of stocks that had mines in Africa, through no fault of their own, but whether there was a coup in Mali or there was unrest in Burkina, and so on, sorry, not Burkina, but in Cote d'Ivoire and so on and so forth. These things have caused a bit of a derating in the sector. The other big factors which have affected them are things like costs. Costs have been rising, so that's impacted a lot of the profitability of a lot of the companies. But the two areas that I felt contributed to their own demise by the mining industry is the lack of capital discipline. So that is an issue that affected them severely. They were building mines which were either sub-economic or not very economic, and they were spending exploration money as if it didn't matter. So they were drilling in places where they shouldn't have drilled, they should have done a bit more work beforehand. So all these things contributed to a declining gold mining industry. The management teams as well were very complacent. They didn't think that it was a problem if that continued, because if they ever needed money again, they'd just come back to the city and the city would just hand them the money. Well, the last 12 months, I think things have changed. And we have seen evidence of change. I think it was in June where I saw 2 major CEOs leave mining companies. Barrick lost its CEO, and Kinross lost its CEO. And there are at least 4 or 5 others which lost their CEOs in the last 6-8 weeks, just because they've underperformed. Okay, so I think management teams are responding and they are changing. Dividends is now a bigger theme than it ever was before in the gold mining space. I've never come across companies that would consider paying dividends, but they now are. And some companies have employed dividends which are linked to the gold price as well, just to make sure that there is capital discipline. So I do believe that changes are in hand, and I do believe the sector is slowly turning around. But within the space, having said all that I said, there's still going to be winners and losers. The city has changed. I am very aware that there are lots of imminent fundraisings about to happen in the gold space. But I'm also very confident that they're not going to take place, not all of them. The best projects will always be funded. Those on the fringe, I believe, will find it a lot harder. So in positioning, just to tell you how I'm thinking, at least from my own portfolio, what I'm doing and what I'm thinking, is that I'm definitely skewing a lot heavier to the producers in the short run. And I'll say that over the next 3 to 6 months, I think the producers will have a much, much, much better time. A, because they're generating a lot more cash flow. Their cost control is a little bit more focused. If we have a slowing economy across the world, they should have less pressure on their costs, which will give them a much greater torque on their returns. And if they're capital disciplined and they give it back to you in dividends, then I think there will be a new wave of people who will start looking at the gold companies in that way. So I think the producers with good capital discipline, good management teams will do very well over the next 6 to 12 months, easily. The other area where they will do well, I think, are the right type of explorers. There are good management teams out there who are incredibly successful in finding deposits. More importantly, they understand the process of how to bring a discovery all the way to production. Now, these guys will do very well, but they won't be many because there are a lot more explorers than there are producers, but not all of them will succeed. I think that the people that will struggle a lot initially will be the explorers and the developers. Generically, all explorers by definition need money to fund the work they do. If they haven't found much and they needed another round of funding, I think this is going to be hard. The city has been hit so hard. My peer group, you cannot believe how hard it has been for them. They've had redemptions like there's no tomorrow. And so for them, capital is very scarce. And they're going to allocate it only in projects which they have the highest confidence in. The developers are also a strange breed. I'll divide them to 2 categories. Developers where the capex is actually relatively small, but the projects have got good and high IRRs, will get funded, and they will be built. Those with mid to low IRRs, but a huge capex, that's going to be very, very hard. And by huge, I would say anything over $300 million will be something that will be harder. If it's under $300 million, more likely. If it's over $1 billion, good luck. It has to be an off-the-clock project to make that work. So I think over the next 6 to 12 months, my outlook on gold is very bullish, more than I've been for a long time, just because we're going through another round of money printing. And within the gold space, there'll be lots of winners and losers. And I've already given you thoughts of how I'm seeing it in the big picture, and I hope to express it in the way in the stocks that I've chosen. So that's really all I wanted to say on the gold and gold outlook. And I just want to give you a lot of time to ask me questions specifically on some of the things I may have said, or even on the fund, or on things that you particularly want to know on the precious metal space.
Great, thanks, John. Yeah, we'll take questions from the floor if any spring to mind. Yeah, there's a gentleman over there.
Thank you. I understand you're bullish on the gold price, which I agree with. I just want to ask, do you think silver will be a better investment in a rising gold price environment? And also, what about platinum?
Okay. Silver is a very talked gold. Okay, it has a much higher beta than gold by about a factor of 2 times. So I think silver will do very well, personally. That's part of the way I position the portfolio as well. I'm just going to show you something, just to prove my bullishness. Wait, maybe I don't have the chart. Do I have the chart? No. Okay, maybe I don't. I have 30% of the portfolio in silver producers, which is a very high weight relative to my peer group. I think a more normal weight would be about 5 or 10%. That shows you how much confidence I have that it will run a lot more aggressively. It is not about industrial demand. A lot of silver is used in the industrial demand, but the investment demand will more than swamp whatever outflows you see in the industrial demand. So on this run, I would expect silver to take out its old high. On platinum, I was very bearish for a long period of time, but I started to buy platinum in the fund last month on the back of the strikes that I saw in South Africa. In my mind, what's happened in South Africa is a bit of a turning point in the metals. This year, demand and supply for platinum, we were going to see a surplus of about 400,000 ounces in platinum. But with the strikes, it's probably more likely to neutralize it. But with the investment demand, I think it's going to swamp it. So I think platinum is going to go up from here. And I see that what has happened over the last 6 weeks in terms of the settlement that Lonmin has made with its workers has just put a much higher cost structure to the entire industry in South Africa. Because if I was working in a mine down the street that's paying me 20% more money, why am I working for you? I will strike until I get it or something happens. Do you see what I'm saying? So I think platinum's going to go up on that basis.
But how would you invest in platinum?
Oh.
I mean, you wouldn't buy a South African platinum?
No, all I've done is I've bought the platinum ETF and I've just bought that for the fun.
Any more questions? Yeah, there's one at the back over there.
Yeah, hi. I was just wondering if you could comment on what you think about the Indian gold demand for jewellery, given the weak rupee, and it's obviously been talked about quite a bit recently.
Yeah, the Indian demand this year has been weak, no question. It has been weaker than I expected, but it's really down to, as you pointed out, rightly pointed out, the rupee. The rupee has been weak, and that's actually meant that the gold prices in rupees have been making new highs, and that's put a lot of pressure in buying. I don't think the absolute demand has slowed, so in money terms, it hasn't slowed. But because it buys less, so the tonnage imported is a lot less. Does that make sense? So that's slowed down. On the bullish side, the central banks continue to absorb it. And that's really the counteracting factor, I think.
And you're not seeing any kind of reversal of the jewellery buying going to jewellery selling at all?
No. The scrap side coming out of India has been fairly benign. So we're not seeing massive size coming out that way. I mean, as you know, this is the Indian wedding season soon. So we will have a look over the next 2 months. And that will be quite critical to see how much demand that will come out.
I was just going to say, are there any key dates you'd have us look at?
It's usually kind of this month and next month are the two kind of Indian wedding season months.
Question in the middle here, the gentleman.
Yes, thanks, John. Back on gold, what's your preference on a geographic basis? Are there areas you wouldn't touch?
Geography is very important. I think I used to have a strong weight in West Africa. My West African weight has come in a little bit more, only because if you know me long enough, I'm a very conservative investor. I don't know what that means if you're looking at the gold space with so much volatility. But I try to go where I think it's safe. So I'm very, very focused in the Americas, so particularly Canada, US, and selective parts of South America. Still very strong in Australia, a little bit in West Africa, but a lot smaller than I was, and pretty much nothing else anywhere else in the world. So I don't...
Nothing in Asia?
No, nothing in Asia. I don't play... I'm trying to think, have I got any investments in Asia at all? Not at the moment. I have a very small explorer in Asia, but like really small. But other than that, no.
Any more questions for John? Yeah.
You mentioned about using the ETFs. Do you do any strategy actually looking at the ETF to see if you can get a bit of fair value when you go into it?
Sorry, say that again. I just missed.
When you
ETF,
you said about using the ETF, do you look at the actual ETFs to look at a strategy to give you an advantage in going into certain ETFs?
Right. And by that, do you mean in terms of low cost, or do you mean by leverage ETFs? Or?
Just looking at how the ETF is made up to see if there might be opportunities.
Well, no, I don't look at it from that perspective. I look at it from the perspective of safety. So I think, are these guys backed by gold, or are they backed by derivative contracts? So I don't play in the US ETF, for example. I play more in the UK ETF and the one in Zurich for gold. For the platinum, I play the one a UK ETF as well. But yeah, I'm not looking at it if there was anything more than that, I'm afraid.
More questions for John, ladies and gentlemen? Well, if there aren't any more questions, then we'll call a halt there and say to John Wong from CQS, John, thank you very much. Very enlightening.